As Abneesh Roy is joining in to talk about that. Abneesh, what really stood out for me is the fact that Neville talking about how quick commerce, I mean, it's not going unnoticed anywhere, right? Quick commerce can have huge scale and digitally enabled micro enterprises can reach their small, tiny audiences at very low cost. So here is a large player talking about, large established player talking about the growth potential in quick commerce. What would your takeaway be from that? And from a listed space point of view, where do you see potential now?
Yeah, thanks. Definitely, DMart clearly is a gold standard in that space. And we have also seen in quick commerce clearly Zomato through the Blinkit and then Zepto and Swiggy, etc. do really well. For FMCG companies, for example, e-commerce is broadly 6 to 10% of the sales already, clearly taking share both from general trade and modern trade. And within quick commerce, quick commerce is already around 30% of the e-commerce. So clearly growing much faster. Second is clearly now customer is also paying for the convenience. We have seen the ticket size, etc. increase. There is a more rational competition rather than just promotion. So it's a healthy mix of convenience and pricing. So yes, I would say that DMart Ready is a play by Avenue Supermart in that space, and they have been doing good work there. So there is a potential now because the competitive intensity from Zeptos of the world or from Blinkits is more rational. I think Avenue Supermart could also scale that up. But on the physical retailing, clearly Avenue Supermart has a huge runway still left. So I would say it will be still dominated by that. But yes, quick commerce could be an interesting option. E-commerce could be an interesting option long-term for all these players.
Okay, e-commerce could be an interesting option long-term. But what about the Avenue Supermart share price? Post this interview, I mean, I don't know if you went through the whole thing, but it seems like, very optimistic views coming in on the kind of opportunity size that this space has, given that we're now moving from a low-income to a middle-income economy in India. For a long-term investor, does it make sense to still buy into this stock?
Absolutely. This is a compounding machine. It went through its own challenges last 1-2 years because of very high competition. And there were investor concerns that the pace of the expansion in terms of the number of stores is also not meeting up. If you see first 3 quarters, number of stores were quite low. But in Q4, they added huge number of stores. So we would say that adding of stores is always bunched up. It is generally slow in the first 3 quarters. That should not be the yardstick to measure DMart. DMart is extremely well-run company, and they have mastered that model of owning the real estate space, which helps them in passing on the discounts and best pricing to the customer because they don't have the rentals. So yes, I would say 2 states are dominating. So Maharashtra and Gujarat are still bulk of the stores, but in rest of the 26 states, some states they don't have a presence. In most of the other states, the runway is very high. So yes, it's a compounding machine. When we speak to the FMCG companies, they speak very highly. For example, Godrej Consumer, interesting data point. In the Raymond acquisition, they have done exceedingly well in DMart stores because both have worked with each other. So what we see is FMCG companies launching specific packs for DMart because of the kind of footfalls DMart is able to guarantee, plus definitely the pricing warrior which it is there. So yes, it's a good compounding machine. Valuations is always expensive, but I would say the worst is behind in terms of the margins, in terms of the store addition, and on the discounting from the quick commerce also more rational.
Absolutely. And quick commerce, right? I mean, we spoke about the potential there, and the management also talking about the huge growth in quick commerce. Just wanted your thoughts on how to approach a stock like Zomato now, because obviously we're seeing the kind of growth that Blinkit is delivering and everybody's talking about that. But and now with the Swiggy IPO as well all set to take place, do you think this pie is only going to grow further? And hence, apart from stocks like DMart, do you think stocks like Zomato continue to be a buy?
So I will not comment on Zomato specific because there is another analyst for this. But yes, 2-3 things clearly favoring the overall space if I see. One is, of course, now we are seeing players go to more cities, go for more rational discounting, which was not the case earlier when discounting was very high. Convenience fee was not there. Now, a lot of convenience fee is there. And clearly, the quick commerce players also expanding the portfolio of products. So a lot of things going right, and FMCG companies and a lot of the other categories also are very strongly focusing on this. Recently, we saw Titan, for example, sell Big Basket and Titan had this tie-up of gold coins, etc. So categories are opening up. So yes, the space should do well. It's more rational competition, more number of cities getting added, and customer clearly is also now starting to pay for the convenience. So all the things are positive, I'd say.
Okay, all right. Abneesh, more questions, but we're out of time, so we'll have you back soon again. For more, we'll take a quick commercial break. It's a wrap, actually, on this edition of Bazaar. The market actually is down 20 points. I mean, I think it looked like it's recovering and it was steadying, but no such luck.